Hey guys, thanks for tuning in. I am blessed to be with Miss Mallory McGee Cooler. Today is a very, very special day. We have done segments regarding different types of loan types, and we have just really touched on about 75% of the loans out there. Now we're going to go into something a little more specific, and what I'm talking about are things in our area where we have people that are investors, and we also have people that are graduating from SCAD and arts people and things like that. So guys, I've got Miss Mallory to help us get an idea of ways that we can buy a house that we don't have traditional forms of income. Mallory, take it away.
So for bank statement loans or DSCR loans, these are going to be what's considered non-QM products or non-qualified mortgage. Qualified mortgage are the other 75% that we talked about, so your FHA, USDA, VA, and conventional. Non-QM give you options to do limited documentation, alternative documentation, different ways of qualifying basically. So I'm in Savannah, and we have a ton of artists there because of SCAD and just, the historic feel of the city. It just brings in a lot of people who may have non-traditional income. One of the loan programs that works fantastic for them is a bank statement loan. So you're not necessarily qualifying off of your pay stubs and your W-2s because you may not have those, but you're qualifying either off of a 12-month or 24-month average of qualifying deposits into your checking or savings account.
Okay, so you don't have to have all the documentation that is, especially in those government loans, guys, they ask you a lot of information. So you just need the bank statement. What type of credit do you need?
So bank statement loans are going to depend on which investor you're going with.
Okay.
Always check with your lender. They usually have a few different avenues to take you down that bank statement loan program, but usually you're going to be on the higher side credit-wise, so 680 plus.
Okay, so you got to have some pretty good credit on that one, guys. What about like down payments and things like that? Is there any threshold, or is that going to be something that's going to be individually specific?
Absolutely. So again, similar thing to credit where each investor is going to have their different requirements. On average, you're looking anywhere between 10 and 15% down. So less documentation means more risk. More risk means a little bit more upfront investment.
Gotcha. Guys, what we're talking about here is a lot of times you have these loans that have some type of insurance on it. These are not going to have that. These are going to be a little bit more stricter. You're going to need a little more skin in the game. They're going to be individually specific to your needs. Mallory does a fantastic job. These are great programs, and I know a lot of people that are in that position where they do have a lot of income that's coming in and they can only show it through bank accounts. One of the things that I've dealt with in the past was some of the different investors that that you work with. Can you elaborate a little bit as far as sometimes how critical they are on some of these programs and stuff like that, and what y'all have seen over the years?
Absolutely. So a lot of lenders are kind of beholden to using a third party to process their non-QM loans. So basically a different company, you're still the representative for the borrower, but you're having a different set of underwriters, a different processor, they have a different system set up for appraisers. So that also means that you're subject to their turn times. If you have investors that don't necessarily move as quickly as we do, then you may be looking at a longer close. We actually do have that program in-house, so you're dealing with your same lender, your same processor, your same underwriter. Really makes the process a lot more smooth, especially because you have that direct communication.
Guys, I have lived this firsthand. You got a sheet of paper like this with all these little check boxes, and an underwriter gets to check box number 3, turns it down, rejects it, it goes right back, and then it's got to come back to them. Then next thing you know, they got to submit the whole file up to that part, and then they go through. They don't go through the whole thing. So it's painstakingly a long process. I am so glad to hear that y'all have it in-house. It makes it a lot easier, guys. What type of time frame, this is what people are going to equate it to, are we looking at by going through your in-house versus going through another one? If you could break that down linearly as far as months or weeks or stuff like that.
Absolutely. So depending on the quality of your investor and how motivated and quick they are at their turn times, you could be looking at upwards of 30-day close, 45-day close, 60-day close. I mean, I've seen it get pushed out to a 90-day close.
Guys, I tell everyone be 90. I tell everyone plan on it be 90 days. Sorry. I didn't mean to interrupt, but that was painful. Go ahead.
Yeah, it can be as much as 90, absolutely. And so the benefit that you have working with us in-house is that our service agreement for our turnaround time is the same. for any loan that comes through. So you've got a 24-hour turn window in processing, a 48-hour turn window in underwriting, and as soon as we have your contract, you can get disclosures from us the same day.
Guys, that's some good stuff right there. That is some good stuff. Now, this is all talking about bank statement. Now I want to get into a little bit different joint. I want to talk about some of the investors we have coming in. Now guys, we've got a lot of things that are happening in our area with the Hyundai plant, the expansion of the ports, just to name a few. And with that, we've got a lot of investors coming out from out of the country, out of the area. So what kind of programs do you have for them?
Absolutely. So a lot of investors have their finances tied up in a bunch of different things, you know, got a lot of pots going on the stove. So income documentation and pulling all of that together can sometimes be a little bit of a challenge. So a great program for investors who are looking to buy more rental properties or things along those lines is our DSCR program. What that stands for is debt service coverage ratio. All the fancy words just to mean you're qualifying for the property you want to buy based off of the potential rental income you'll get once you own it.
Okay, so give us an example of what that looks like.
Of course, so there's different ratios depending on which investor does your DSCR loan, but on average the standard is 1, meaning that if your mortgage payment is set up to be $1,000 a month, then when the appraiser goes out to do a market rent survey, which is where they determine what fair market rent is for the area you're buying, your rental income needs to be at least $1,200 or more.
Looking at the rental history that we've got going on right now, we're watching rental rates go up significantly in this area. And we're seeing a lot of rental housing, rental apartments, just townhomes. All these things are hitting and flooding our market because the influx of people that are coming into our area. So guys, this is a great program. Now, speaking of which, do we have any type of credit limits, scores, anything like that?
So anytime you're using a non-QM loan program, it's always going to favor you to be on the higher side credit-wise. Again, it's going to depend on which investor you go with. They all have different overlays and requirements. Check with your lender, they can figure that out, which one makes the most sense for you. But you're really going to want to stay around that 680 to 700 plus range.
Okay, guys, a lot of great information. And this is definitely specific to your circumstances. So if you have any questions, please reach out to Mallory. Mallory, give them your information, please.
Absolutely. So I am available. I work Monday through Sunday. You can reach me anytime. I give out my cell phone number. My number is 912-704-3305. You can also visit my website. It's www.mallorymcgee.com. It's got great information on there about our other loan programs, really great glossary if you want to learn some of the mortgage terms that you may have heard thrown around. And it also has a mortgage calculator where you can play around with down payment and interest rate and see what that does to your mortgage or your monthly payment.
Mallory, as always, thank you so much for taking the time. I love you, hon.